What's going on, guys? Throwing together a quick update video. Green today on AMC. I'm still not convinced that the bottom's in. There's a case for it. I'm going to touch on that when I get through the video. And SPY saw some more green today. So jumping into the video now, starting with the macro on SPY. Once again, descending broadening wedge for a year. Breakout, retest, reclaim the triangle. Break out of the ascending triangle. Upside to 444. Pulled back to the 20 EMA. Double top. And now we have pulled back once again. And saw green today back to the top of the range, roughly 442 and change was the close today. 71 days in a row closing over the 200 EMA and golden cross on the daily, all of which is very, very bullish. Once again, touching on SPY daily because the previous two times the meme basket and AMC squeezed, SPY was rallying to the upside in a very similar fashion to what we're seeing here. So into the symmetry now. The blue box would be your middle. You have your lowest wick here. One break above the ascending triangle here to retest the macro of the wedge. Coming into the red, you break below the horizontal line at 380 on both sides. This side a little bit lower to retest the wedge. Bounce up to 418 on the dot on both sides. Reject there. Come down, bounce on 380 on the dot on both sides in the green. Find an uptrend and then have 3 touches on 430 on both sides, indicated by the purple circle here. Break through that, reject 438, come down, break through it. Reject 438, come down, break through it. And we were looking for a move to 450, and from there would have been the pullback to the 438 range to establish support before we move higher. So I mentioned this multiple times. We didn't get the full move to 450. We got the move to 444, rejected there. And I said because of that, we would not be finding support at 438 like we saw back here, but we would be coming slightly lower to this horizontal line in white at 430, which is pretty much what happened. Came down to 431. And then from there, found a bounce, and we got the double top slightly higher that we were looking for, and then the pull back to the middle of the range that we were looking for. Once again, this move is perfectly symmetrical. Touch points, everything. Everything's perfect here. And now I'm going on the next slide that I'm going to be showing. I'm going to be zooming in on the green circle here, comparing it to the green circle here, looking at it on the 1 hour on a smaller time frame to see what we have going on. So doing that now. On the right would have been where we are currently. On the left would have been the 450. So again, on the left is going to be the green circle here. On the right is going to be the green circle here. So zooming in on that now. So on both sides you have the pump. On the left you got the full pump to 450. And then on the right we got the pump to 450. I have it in quotes because it only came up to 444. From there, you come down, find support, and then you double top slightly higher, indicated by this yellow square here. And then the exact same thing here, came down, found support, double top slightly higher right here. You even have the same kind of move down before you come up to the top of the range again. Same on both sides here as well. Come to the top of the range, and then you break down to the middle of the range, and you get the W. So you break down, have your first bottom, pop back up to the top, you get your second bottom, pretty much a perfect double bottom there, and then you pop back up, forming a W at the middle of the range, exactly what we were looking for. Over here, same exact thing, breaking down from the range here, find a bounce in the middle of the range at that 437 that I was talking about, bounced up to 442, rejected that, came down double bottom perfectly, so we got the W here, found a bounce off today, and then saw more upside today to 442. So this W finished playing out. We are at the end of this now. And the next move that we should be getting is a gap up. I'm not saying that it has to be a gap up, but I am expecting green tomorrow in a big way for SPY. 450 is definitely on the table tomorrow for SPY, and more than likely it'll be the CPI data reported in the morning that will be launching us to the upside. And again, 450 is on the table for SPY tomorrow. So yeah, the market is completely real. It's not fake at all. This is, retail and institutions doing this, how it just played out perfectly symmetrical. The buys and sells must have just coincidentally lined up perfectly like this. And then, even zooming in even further, it's perfectly symmetrical. So the market is very real. Balance sheets matter a lot. PE ratios matter. FTDs are real, all of that. So SPY is going to be seeing upside tomorrow on the CPI data. The CPI is going to be good, and 450 is on the menu. So that's it for SPY. Again, touching on SPY daily because the previous two times the meme basket squeezed, SPY was rallying to the upside in a very similar fashion to what we're seeing here. And once again, breaking both macro patterns, the descending broadening wedge and the ascending triangle to the upside. Golden cross on the daily. This range here, we haven't seen in over a year, April 2022, and higher highs and higher lows from October 2022 until today. So very bullish here. Now getting into AMC, starting with the macro here, where you have a descending trend line on both sides. This one, 2017 until your squeeze, January 2021. And then over here, the descending trend is from the breakdown from the June highs here, when you break down from the flag in November. Descending trend line, same exact way. You have your macro fractal break right here, this gap down, same thing right here. You play out this W pattern, very sideways price action on both sides from that gap down, the macro fractal break. And then from there, you break down into the downtrend where you're just laddering down one leg at a time here. Again, the green being more or less a W on both sides, the red being more or less a cup on both sides, and then the blue, you come down, you bounce up, you come down, you bounce up, and you come all the way down to the bottom, curl up towards the end, come all the way up, down to the bottom, curl up towards the end, before dropping to the flat portion here, where you have 3 touches, 1, 2, and 3, and over here, same thing, 1, 2, and 3. Now, 2 possible scenarios: the bottom would be in, or we will be coming to a lower low than what we saw in April. There's a case for both. We're seeing some downside right now after hours, pretty much just waiting for a confirmation move. So once again, the market is completely real. Nothing about this is fake. Every time you buy AMC, it affects the stock price in real time. Completely real. Very real stuff we're seeing here. So the macro, again, this is the other perspective I show. So once again, the macro fractal break right here at the start of the downtrend, as you see it here. The W pattern that plays out on both sides before you break down to the downtrend, and then you have 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6, which takes you to the end of the blue. And then from there, you drop down to the flat portion where you have 1, 2, 3 touches on the bottom. 1, 2, 3 touches on the bottom. And again, there's a case that the bottom is in right now, and there's a case that the bottom is not in, and we will be coming down to the lower low, lower than the April knife that we saw here. That's what happened back here. Doesn't have to play out the exact same way, but as of right now, I'm leaning more towards we're going to be getting that downside, hoping that we don't. You know, that just if the bottom is in and we're in the uptrend already, that just we're going to squeeze sooner. So, but the way it's going right now, to me, it looks like the bottom is not in, and we will be getting that lower low. APE looks very bullish right now. AMC looks bearish, and the case for the two of them meeting around $3 for the conversion looks like what's going to happen again. I'm thinking we're going to be hearing news on that this week. I said mid to end of week. It looks like we're going to be getting a move soon, and I'm assuming that move is going to be on news. So that's that for the macros. Now jumping into the micro. Once again, what we're doing for the micro here is zooming in on the flat portion on both sides. So the orange, purple, and blue versus the orange, purple, and blue. So we're just zooming in on the flat portions on both sides. Once again, from this downtrend here, when you get to the flat portion, we're playing this out the exact same way that it played out back here leading up to the January squeeze. So we're playing this out the exact same way now, but on top of the flat portion here. So we're doing the exact same thing on top of this, acting as support now. So this looks very, very good. So now getting into the micro here. I'm not going to be doing candles. I like the way the area chart looks better. It's a lot more clear. So in the orange, you come down to the bottom. You have chop. This is your first bottom here on both sides. Same thing. Over here, you come down to the bottom. That's your first bottom. You get this chop. From there, you find a bounce. You have 3 peaks in increasing height. Each peak higher than the last here, which takes you to the end of the purple. And over here, same thing. Increasing height on each peak, which takes you to the end of the purple. Again, the purple just being a cup, more or less. Higher peak on the right, and the exact same thing over here, higher peak on the right. So from there, you come into the blue, where you come down, you break below that horizontal line, bounce above it. Over here, same thing. Break below the horizontal line, bounce above it, and then from there, you come down, get your second bottom. Same on both sides. From the second bottom, you bounce up into the tri-peak. Same on both sides. And then from the third peak of the tri-peak, you get downside one last time to your third and final bottom here. And that is where we are now. So there's 2 cases here, and while I'm here, I'll just show them. The first case, the bull case, I don't think this is the case right now, but it is possible. There is a case for this, where the bottom would have been in here, and we would have popped up here, and then we'd be in this pullback here. The wick down would just, it can't be explained fractally, but, you know, if this is the bull case, and again, that wick down makes the bull case a little bit less likely, in my opinion. So that would be the bull case where this was the bottom here, you bounced up and you get the pullback just the same way we saw here, and the next move we'd be getting is the breakout move here. The other case would be from the third peak of the tri-peak. From the third peak of the tri-peak, we would have been this portion here where you come down and find this cup here, and then you get descending price action here, and we'd be somewhere right here about to get the rest of the knife down to the third bottom. So again, we're tracking this faster. We're tracking the macro roughly 3 months faster, the micro roughly 3 months faster than the way it played out in January 2021. So we're moving through this faster. And the two cases, again, the bottom being in, we'd be in this pullback here and squeezing very soon, very, very soon. And the other case being that the bottom is not in and we're going to get the lower low. And then from the lower low, again, in the 2021 cycle, from the lower low until your peak was 22 days roughly. So that would be the case here where we get the lower low, and it would be roughly 22 days, and more than likely faster because, once again, we're tracking the macro faster here. So that's it for that. Again, the RSI chart, I'm not going to go through this. It's if you have to pause it, and the RSI is in the bottom in the white, and the flat portions of both cycles is up top, and the RSI is pretty much perfect all the way through. So I'm not going to bother going through this again. I'm just going to keep updating it and just throwing it in my videos for the time being, and that is that. One thing I will touch on though, and this is the same thing where you have the RSI on the bottom, and instead of candles up top now it's the area chart, and I threw on the 20 and the 50 EMA. The 20 is in the white and the 50 is in the yellow. So the 20 EMA in the orange box is under the 50 the entire time, and then you break above it, and then you get this wave move. So you break above it, you come underneath, and then you break above it again slightly higher at the end of the purple. And then over here, same exact thing. The 20 is under the 50 the whole time. You break above it, you break back underneath, and then you break above it higher at the end of the purple. So same exact thing. And then from there, you break below the 50, hovering under it the entire time on both sides. So break below the 50 again here, hovering under it. And then you cross in the tri-peak, same as here. You cross in the tri-peak, and then you come back underneath and pretty much hovering under it, the 50 right now. And again, the next time the 20 EMA crosses the 50 to the upside on the 4 hour, on the daily, however you want to look at it, the next time the 20 EMA crosses the 50 to the upside, we're squeezing. Pretty much is my point here. So the EMAs are perfect, the RSI is perfect, the movement is perfect, the macro is perfect, SPY is perfect. It's all real. This is all real. This is retail and institutions doing this. We're just buying and selling at the perfect time, and we're driving the price action to do the exact same thing that it did prior to the squeeze in 2021. The EMAs, the RSI, we're doing all of that. The market is completely real, not fake at all. So that's that. And the histogram, once again, I'm just looking at the blue box here where you start red in the blue box, same on both sides. You flip to green, and then you flip to red, and that is while you're coming down to the third and final bottom here. So histogram looks good, everything else looks good. One other thing I wanted to touch on is, once again, this is the flat cycle, the flat portion of the 2021 cycle on the left and the current cycle on the right here. One thing I do want to touch on is that we have this macro trend here in white. From the second peak of the tri-peak is your first rejection, come down. You have your second rejection, come down even further. You have your third rejection, come down even further. Fourth rejection today. 2 rejections off today. So we have this macro trend still. It looks bearish here. We're forming lower lows and lower highs, and at the same exact time, APE looks very, very bullish here. And again, we are inverse APE. So the April after hours knife that we got, that took us to our second bottom, APE ripped, and that's this rip right here, and then came back down and traded in this triangle here for 3 months before breaking out, retesting, finding a bounce off, comes down, starts curling up, had a crazy pop pre-market yesterday to 238, came all the way back down, and then today forming more higher highs and higher lows, curling back up to the upside. Again, we're inverse APE right now. As far as I can see, as of yesterday, we are inverse APE, and APE is looking very, very bullish right now. Having broke this 3-month pattern here, broke out, retest, and now forming higher highs and higher lows, and once again curling to the upside. So the case for APE and AMC meeting at $3 it's a strong case. In the same breath, you know, it is possible that the bottom is already in, and we'd be in this pullback here. So that would be the bull case. Regardless, the next move that we get out of this range, out of this 440 to 420-ish range, the next move that we get to the upside or downside will be extremely telling. It will be telling me everything that I need to know about the tracking and where exactly we are. Because once again, there is a case for the bottom being in, and there's a case that the bottom is not in. So the next move that we get to either to the upside or downside will tell me everything I need to know. If we get a move to the upside, here's where we are in this breakout pattern right here. If we get a move to the downside, here we are coming down to our third and final bottom here. So really, I'm just waiting for the break out of this range. We've been very sideways, in this range for a while now. In this range here, just sideways. I mean, we are forming lower lows and lower highs here, so it is what it is. Just waiting for a move out of this range, and that move will be telling us absolutely everything that we need to know. So that is pretty much it for the video. So once again, just a quick recap. SPY is extremely bullish and was in 2021 when AMC and the rest of the meme basket was squeezing. It broke both of its macro patterns here, descending broadening wedge and ascending triangle. Hasn't seen the 200 EMA in over 2 months now. Golden cross on the daily, very, very bullish on SPY. SPY will be going to all-time highs in the relatively near future. The move is perfectly symmetrical on SPY, touch points and everything, perfectly symmetrical. We would be at this green circle here now, and right here actually where we're about to gap up and get upside. 450 is on the table tomorrow. CPI data is going to be good tomorrow and probably launch us up towards 450. This move is perfectly symmetrical and the market is completely real. This is us just, buying and selling, and just somehow it ended up being perfectly symmetrical like this. And then, zooming in even more on the micro, we finished playing out this W here. So the next thing we're looking for is this gap up and a move to 450. Again, CPI is going to be good tomorrow. The news completely matters. The news drives the market, not the other way around. The market's completely real, not fake. The macro on AMC is perfect. Absolutely perfect. The touch points are perfect. Everything looks great here. Same thing here, same exact macro perspective. Really, the only problem here is we don't know for sure if the bottom is in or if it isn't. And more than likely, we're going to be finding out this week. We should be getting a move out of this range this week, either to the upside or downside. The bull case, that move to the upside would be breaking us out of the triangle. That would be our breakout move. The bearish case would be more than likely an after-hours knife on court news. That would be tanking AMC to the mid-3s, and at the same time, because we're inverse APE, APE would rip to the mid-3s or low 3s, and APE and AMC would meet around $3 for the conversion. The conversion would go through. That would be the final bottom on AMC, the third bottom here, and then from there would be the uptrend, and then that would be the end of the story there. So the third bottom, we get the uptrend, breakout, squeeze. Again, I'm leaning MOAS. The entire meme basket is synced, so it will be squeezing at the exact same time. I'm leaning MOAS here, and what comes from MOAS could be catastrophic for the market. This might be very crazy what we see from this. The micro is perfect. We're tracking this faster, roughly 3 months faster. So once we have confirmation that the third bottom is in, it should be less than a month until we peak, until we squeeze. So 22 days from the third bottom until your peak, and we are tracking this faster. So that's that. The RSI is the exact same. Again, the market is completely real, not fake. The EMAs are the exact same. Again, the market's real, not fake. And that is pretty much it. We have this downtrend, this macro downtrend here, that we're forming lower highs and lower lows. So it looks like this is clearly bearish, and there is a case that the bottom is not in. I'm leaning that the bottom is not in. I'm waiting for mid-3s here. And at the exact same time, APE looks much more bullish than AMC does right now, having broke out of this 3-month pattern, retested, and now found a new local high yesterday pre-market, came back down and forming higher highs and higher lows today, curling back to the upside. And we're trading inverse APE as of yesterday. APE looks way more bullish than AMC does, and the case here would be APE rips to the $3 range. Once again, AMC tanks to the mid-$3 range. The conversion goes through. That is your absolute bottom on AMC, uptrend and squeeze from there. Again, I am leaning, if I could pull this the fuck over here. All right, so I'm leaning MOAS, but we can talk about, not stupid numbers. We could talk about like the conservative shit. So starting with the fib extensions here, this would be the January squeeze. So from the bottom to the top to the bottom, coming halfway in between the 2618 and 3618. You came halfway in between on that squeeze. On the June squeeze, from the bottom to the top to the bottom of the January squeeze, so the June squeeze we're looking at now, came up to the 3618 pretty much on the dot, actually poked slightly above it. So the January squeeze came halfway in between the 2618 and 3618. The June squeeze came up to 3618 on the dot. So for the current cycle, running a fib extension from the bottom to the top to the bottom here, halfway in between the 2618 and 3618 would be roughly $130 to $145. That's your conservative price target on AMC. That's if we got an algorithm squeeze, once again, what it would look like. We're just stair stepping. So we get the January squeeze come down, June squeeze come down, this upcoming squeeze come down. That's if we got an algorithm squeeze again. I don't think we're going to get an algorithm squeeze again. I think we're going to MOAS completely. And again, confirmation of your MOAS would be breaking the 4764 here. So anything 200 plus on this upcoming squeeze, you're in MOAS territory. With the reverse split, it would be anything past $2,000. You'd be in MOAS territory. So that's pretty much it for price targets. Everything looks great. The market is completely real and not fake. And I will catch you guys in the next video, just waiting for a move out of this range. That move will be telling us everything we need to know, and that's what we're waiting on. So catch you guys in the next one.